So I invite on stage Mr. Avtar Monga. He is the Chief Operating Officer of IDFC Bank. A round of applause for Mr. Avtar Monga. He is the moderator for this session on implementation of innovative technologies for NexGen banking. A round of applause please for him. Then Mr. M.V. Shishadri, Chief Information Security Officer of National Stock Exchange. A round of applause for CISO NSE. Mr. S.K. Mishra, Chief Information Security Officer of Central Bank of India. A round of applause for Mr. Mishra. Mr. Bhavesh Lal Lakhani, SVP, Senior VP and Chief Technology Officer of DSP BlackRock Investment Managers Private Limited. Round of applause for Mr. Lakhani. Mr. Kanchan Kulkarni, Regional Head of Maharashtra from ICICI Bank, one of the renowned, most important banks of India. Round of applause for Mr. Kanchan Kulkarni. Mr. Lalit Popli, Head IT of ICICI Prudential Asset Management. Round of applause for Mr. Lalit, please. And now with this introduction of speakers, I hand over the session to Mr. Avtar Monga and request him to please keep it within 40 to 45 minutes. Thank you.
Thank you. Here since morning, and I have actually looked at the agenda. It's been pretty exhaustive. And you have moved from the cloud computing to cyber to the networking and the digital discussion. So I also understand that we are standing in the middle of your evening drinks and the time now. So we'll keep it 45 minutes only. So where we are now. So we are actually at a very interesting point, and the topic we're going to talk about is called the innovative technologies for NexGen in banking. Actually not in banking, in financial institutions or BFSI segment as general, because it's not just the bank which is getting impacted by what's changing, it's also the insurance and other companies. But before I actually hand it to other people and get their views, I want to give you a perspective of what I see. I think the definition of banking or financial institution per se, if you were to think back, say 20 years ago, meant a couple of very basic things. It was a branch, an ATM, and maybe in some cases internet banking. And then started the kind of idea of applications era. And it went from only the funny part of the application to some serious business. And today the application are actually a very significant portion of what happens globally. Fast forward another 10 years, which is about 10 years ago, it was still more of this in more dynamic way. But in the last 7-8 years, the amount of innovation which has taken place in the financial world, it's ranging from how we look at authentication as a process. It's ranging from how the money gets exchanged. It's ranging from how customers get reached. It's ranging from the boundary of a transaction. I mean, you can literally go anywhere in the world in less than half a nanosecond because the whole world is become interconnected. So when you look at the last 5 years particularly, you see a bunch of things which have taken place. I mean, Aadhaar, a great example of what is happening. The penetration of mobile. Less than 6 months ago, penetration of mobile was still very important, but what's happened in the last 6 months is actually going to change even how we look at the phone banking and other things. The more recent example of having zero fee on the way we do transact up to 2,000 rupees. The reach which is going to change the game. I mean, I was telling people in another session where we were saying that historically one of the reasons why India was very concentrated around the top probably 200 cities, and I have some senior bankers sitting here, and it never actually reached out to the last mile was because of the cost constraints. It was very cost ineffective to actually set up the business and run it profitably. But think about what's possible today. The branch is getting replaced by a small piece of device called phone. It does not anymore require for you to have so many additional things for you to transact. So when we talk about the term next gen, this is what we see today. And imagine what next gen could be. So one of the thought I had was to think about what potentially could take place, and then I'll request my co-panelists to kind of talk about what is their understanding, and they come from very, very diverse backgrounds, so we'll get to hear from ranging from the National Stock Exchange to the large commercial bank as well as some investment side of partners. My sense is very simple. A couple of things will happen. One, historically, there was a view that I own the customer. As the time goes by, the ownership of customer is not going to be relevant. What is going to be relevant is who is the service provider to the customer. It's partly happening today. When you go and buy a ticket online, you're actually buying from a portal who doesn't have a rail or even access to that. But the reality is in the back end, there is a bank, there is a railway, there are 10 other things. But as far as the customer is concerned, you could actually argue that all of these entities involved in the railway booking could call you as their customer. But effectively, you are only looking at frontline portal, and that's what you remember, that I book my ticket and book my trip, right? You don't really go beyond. So that's one big change which is happening. The second is, with the technology getting more and more evolved, the replacement of human action by the artificial intelligence is going to be a significant change. What it means is that you will be able to replace the repeatable processes by deploying technology and making it totally automated. A lot of it is happening today. Think about KYC, just as an example today. It used to involve large number of papers, physical, touch and feel 5-6 times, signing of hundreds of documents. Today it has come down to a fact that you can put your thumb impression. If you're Aadhaar-based, a registered user, it comes back in less than 3 seconds. In fact, in our company, we've actually run a campaign where we are saying that pizza in 30 minutes and the account in 4 minutes. And that's a real, experience we're talking about. So I think all this is going to change. The other thing which is going to change is that the boundaries are actually shrinking. This whole idea about the businesses being protected because of, a lot of boundaries. The only logical boundary which still remains today in this country is basically what we call regulatory arbitrage. Think about this. If the banks were allowed to do what they are allowed to do, and the wallets were allowed to also pay interest on the wallet money, it's a very obvious question as to why people will do both things. So the point I'm making is there is still a lot of room left for some of these entities and the businesses, which as the time progresses, who knows? I'll give you another example, then I'll bring the other panelists. Historically, why the acquisition business or the acquiring business or the last mile connectivity in the rural India has not been effective is because most of the times when we talk about what is called merchant discount rate, when you go and swipe a card on a machine, the merchant actually first tries to charge you, and if you don't want to pay, they will still be paying to the bank, and the bank will pay to the acquiring bank, and the acquiring bank ultimately will share with Visa or MasterCard, which ultimately goes to the issuer. So the entire cycle of a transaction was favoring the issuer lot. It never took into account that you need to have the acceptor also be happy about it. I think that's another change which you'll probably see in some times, where we will see a much more focus on what the acquiring network needs to build, and that will change the whole composition of how the electronic commerce gets transacted. So these are the things which I see happening, and it's going to be important for us to not just hear me, but also get a perspective from the other panelists. So I'm going to invite, in any particular order, I'm going to start from the other end since my friend is sitting there. And mind you, he's not a banker. So it's going to be his view. And remember, he's sitting at a place which may not see the transaction in a direct sense, but he has a full visibility into what's happening across the economy. So over to you.
Good evening, everybody. I'm Seshadri from National Stock Exchange, managed security. We are, unlike a bank, not a B2C enterprise. We're largely B2B. So I can probably mention a few technologies that we use or we adopt or intend to adopt, and it's more from what happens in the back end. Obviously, it will impact big way to a customer, but it's largely invisible. In our environment, one large innovation that we are adopting is blockchain, in terms of the trust-based transaction, which is universal and spread across. You don't have to depend on a single entity to validate or authenticate your every transaction. That's going to be a big blockbuster change in the coming years. Another technology that we have adopted across all solutions, and especially in security, is on machine learning. More so because in security today, because of cybersecurity threats, alerts, and NAC being national critical infrastructure, anything happens in India or about India, we get hit. As simple as if India loses a cricket match, we get hit. India wins a match, we get hit. India, Pakistan, tensions are increased, we get hit. For everything, we get hit. So the proportion of hits to our capability to defend is increasing largely. And the hits are largely nowadays coming from machines and not from people. So if you're having people defending machine attacks, someday we're going to lose very soon. So we're building a lot of capability on machine learning, enabling our systems to learn on their own, obviously helped by a human being. But that's one area that we are currently working on heavily. The other, probably, if I'm not relating to my own industry, would be like Mr. Monga mentioned, artificial intelligence. But how would it impact the customer is having capabilities like chatbot or virtual assistants in enabling very specific miniature customer support services.
Good evening, friends. I am Dr. Mishra, CISO Central Bank of India. Nowadays, customer preferences are changing so fast that it's very difficult to keep pace with them. As regards the NexGen banks, actually, if you see the inside of our working, all of the major banks are using three softwares, either provided by TCS or Infosys, iFlex now owned by Oracle. So the difference depends upon how much you are exploiting that particular technology. Now, the customer loyalty we were talking about earlier is no more visible. What I am seeing rather, customers are changing banks just like they are changing their energy suppliers or telecom operators. It's a bare truth. What we need to do is, we need to develop new product, new services. Whatever the traditional products and services are there, we need to continuously revisit them, whether they are still relevant or not. So, first thing is, we have to develop product and services, what customer really need, and not only this, at what price they need. Because there is differentiation, it is only in customer service and products. There is a big challenge, this is a big challenge, before this is need of the hour rather, for not only financial sector, but basically banking industry in particular, that they have to revisit all their products, services, and whatever the conventional wisdom we have acquired in the past, we need to undergo a radical change. What generally we are doing, we are just trying to change the things. That era is over. Day by day, day in and day out, you will find technology is changing so fast that customer experiences can be changed radically different. Only a few days back, I was going through the Barclays Bank's article. They are having one product, Ping 8, Ping IT or Ping 8, for fund transfer. Actually, the product says, on the write-up says, that one of them, or either sender or receiver, should have an account with that Barclays. The other party, even if they are not having that account, funds can be transferred. So it's a good product. So need of the hour is we should revisit, we should change our conventional this methodology, strategy, and not only strategy. Now we don't need long-term strategies. Time has gone. Then we started medium term. Now there is a need for only short-term strategy, which we should again revisit, continuously revisit rather, whatever our operational strategy is, whether it is fitting to that or not. So that is need of the hour.
Good evening, friends. My name is Kanchan. I am from ICICI Bank, Regional Head, Maharashtra. Thank you, Ms. Raji, for meeting and putting an overall perspective as far as banking is concerned with respect to the technology which has evolved. I am saying evolved because as a small partner of a bank which could be a new generation bank which we say, which has come up around 20 years back. So I am a part of that banking community. If you look at this journey, if you look at the way we have come up here, I would say a really long journey. We have come, all bankers, all people who have been putting this technology in place have really come a long way. We have really evolved. But if you look at the pace, the amount of time it has been taking, and the way we have come here, I would not say the pace of technology, the place where the technology is playing a part is not all. Because going ahead, if you look at the, that is what the topic of the session says. When you look at the NexGen banking or NexGen technology, specifically in all BFSI sector, what could be challenges? Thankfully, I would say, government itself, they are very keen that there are a lot of things which needs to be put into technology, lot of things which products should lead, which have technology per se as a part of it. And while going ahead, banks have been assigned a lot of responsibility. I would say for customer perspective, when bank like ours, bank like ICICI Bank, when it was set up itself, they had an objective of what? We should have products, we need to have such services which are customer oriented, we should have such technology which is much more needed for the customer which was waiting for it. That's the way we develop ourselves, we design our products. But if you look at this and for the banking, for the next gen, what are the challenges? Still I would say that we are at the crossroads. All bankers, we are at the crossroads, not in terms of the threats or whatever vulnerability we have, but the challenges. Apart from the customers, government themselves, government department, various departments, they are putting a lot of responsibility, lot of assignments on this. So if we would like to deploy this and would like to reach another milestone, that within a very short span, the challenges are many. Talking about certain regulators, we have various pillars for us. On one hand, we have regulators through which we can't go away with. All rules and regulations, they are so strict, stringent, so we need to follow this. On the other hand, we have customers. So those set of customers whose requirements in terms of more and more technology-oriented requirements, they are ever increasing, which we need to develop, design, and put into place. On one hand, we have also stakeholders. What I mean to say is, we have multi-pronged challenges to go ahead. And please mind well that the way we have come up, the span which could take in convincing, in making them in line and stabilizing, that much time is not there. So going ahead with this perspective, yes, whatever, to have a small rollback, so whatever challenges have been given or which were given to bank have been successfully implemented. So from that point of view, I would say bankers of this generation like me and all my colleagues are really blessed. Positive point of view that yes, we have been given the responsibility and successfully implemented. In a way, the one small effort was Jan Dhan Yojana, which was again responsibly given to the bank. Government wanted to have relationship to build up with minimum 14 crores of people. As on today, what is the figure it's reading now? We already crossed 14 crores and plus which is going on. So what I mean to tell you guys is, one milestone is over and to grab over another milestone. So from that point of view, when I say we are at crossroads, and when I look at from as a front-runner banker, from basic customer point of view, the customer, normal customer who is looking at us, we have a lot of expectations for his day-to-day banking needs from us. So the question is, the small question for all my tech partners also, are we doing full justice to him? So whatever solution we are designing, whatever solution we are deploying and putting in place, whether customer is comfortable, whether customer is absolutely foolproof to use his technology and going ahead with banking, whether he is comfortable from two counts. Firstly, as far as money is concerned, whether it is absolutely safe through which the technology is being deployed. And second question, other than money, whatever data he has, whatever information, full trust is given to the bank, is it safe, is it secure? So I think on these crossroads and these challenges ahead of us, I think with whatever tech team we have and whatever tech partners we have, a bigger challenge of all of us, so that with the passage of time, whenever we will be deploying this, we need to provide full support and comfort to customer, so that the trust and the comfort customer had when we used to have manual sort of banking without technology also, so that with whatever best of the tools we are putting in, the same trust will be continued. The relationship not only will continue but enforce it, will forge ahead. I think that is what a big challenge not only for bankers but all those who are joining hands with us, tech team and all tech partners. I think we should take care of this. This is what I take from this. Thank you so much.
Good evening, everyone. I'm Bhavesh Lakhani from DSP BlackRock. We are a mutual fund company. So I want to structure my thoughts in two parts. One, the overall BFSI industry and how it's headed, and second, what pertains to the mutual fund industry. So to begin with banking or BFSI per se, I completely agree with what Sheshadri started off around blockchain. Right? It's almost a 15-year-old technology which was first introduced in the late 90s. And we are seeing, again, it was too ahead of its time, so now we are seeing some outcomes from the blockchain where you see certain form of cryptocurrencies. In fact, yesterday I downloaded a Bitcoin app where I could buy and sell Bitcoins. I don't have any, let me put the disclaimer first. It's around $800. Some wise man told me in 2009 to buy it when it was $2 a pop. So nevertheless, the trend is going towards P2P, or what we call as peer-to-peer. Have you heard of lending applications where you can earn slightly more interest on a platform where I can borrow at a slightly less interest than what we pay to banks or what bank charges us? That's where the economy is, the world economy is headed, right? Second, around blockchain itself, it's distributed ledger, right? So it provides a lot of secure options. It also takes away the middleman, right? They say that, and again, this is the article I have read, so don't quote me on this, but they say Amazon will not exist once blockchain picks up. Uber will not exist. Gone are the days of the middleman where, these aggregators or marketplace companies will have no role to play. Because if a driver is driving towards north, then you will be able to easily pick up that person and pay him using maybe a mobile wallet, right? So again, you rightly mentioned about the government supporting cashless economy. That again is a paradigm shift from, a small Udupi owner taking Paytm instead of cash. In fact, I have seen some street hawkers putting boards around acceptance of Paytm. So overall, I feel this dovetails into the overall technology shift that we are experiencing today. Coming back to the mutual fund industries, I think there are several initiatives, one being the eKYC or the central KYC. Mr. Munga rightly said, within a few minutes you can get authenticated. I'm aware that IDFC Bank is doing that, but also you see a lot of these mutual funds also trying to adopt it.
All banks are doing it.
Right. So that is where I think we are headed in terms of no more paperwork, no more, filing it at the branch. You can be sitting in your home and transacting. So I think these are the shifts that we are experiencing, and these are the stages which the banking and financial industry will evolve into. Mutual fund, again, from my organization perspective, there's an instant redemption available today on one of the funds. Earlier, when I invested 10 years back, it was T plus 3 days. So when I send a request to redeem or buy, it takes 3 days to place the funds or redeem the funds to my bank. Here, you can do it in 18 seconds flat now. So mutual fund industry has been unfortunately lagging in terms of how a bank moves, but they are coming to terms. So I think these are the trends which, in my opinion, will shape how we move forward in the banking and financial services. Lalit?
Thank you, Bhavesh. My name is Lalit. I'm from ICICI Prudential Asset Management Company. So we are in the same field, and therefore we can agree to disagree on many things. It is said history repeats itself, and we have seen technology being the big disruptor. We have seen a lot of old techs which we are used to, maybe the landlines and all changing out of fashion. Nokia phone case study everyone understands and things like that. So what used to happen in, let's say, early 2000s, and not go before that, in banking, there were these financial institutions where one would join and say one will retire from there, because that was the epitome of success. You're sitting on the high chair, and anyone wanting a loan or wanting to buy a house or anything comes to you with a begging bowl and say, I want to buy, and you evaluate, okay, so let me see, I'll help you, and it will take 50 days and 60 days. And in parallel, there was a lot of these technology companies, Indian as well as US and others, who were innovating at a very fast pace. And we came to a cusp where technology became consumer technology. It was no longer the domain of some geek in big companies sitting on another high chair, telling what server, this technology, that, and giving a PhD knowledge. It became consumer. Consumers started feeling it. And there was a lot of these companies who saw an opportunity to take advantage of it. And they did it. And when they started doing it, it was a big kick on the backside of a lot of financial institutions. And suddenly everyone started feeling the heat and said, okay, this customer who we thought ours, as Kulkarni sir said, suddenly is not your customer. He could go anywhere. He had an advantage, he could compare, he could check the latest price. No longer you can say, I will sell you dollar at X rupees, and you have no choice but to buy from me. He could go anywhere and buy whichever was giving him a better rate. And that mindset has changed. And therefore, we see now a lot of innovations happening at a breakneck speed. So blockchain, which came with Bitcoin, suddenly is now back in the news. And a lot of financial institutions want to adopt it. Why? Because again, as the word banking has come from a Latin word called banca. It actually means trust. So finally we are saying there's the only one thing that banks have left with them, or financial institution, is the matter of trust. The day some other authority or other institution comes and replicates that trust of the customer is a day when a lot of us will have to really be looking out at other means of employment possibly. So that's how innovation plays a big part in the everyday life, because consumerization has taken place. And the way I see it, since the topic is about innovation, is that we are not there yet. There are still a lot of things to be done. We really found one more adoption by customers or by consumers, a lot of us and our kids, on this game called Pokemon. So suddenly, augmented reality, you find people walking around, with their cameras on their mobile on, trying to do. And easily financial institutions, and we have tried something on augmented reality, we catch on to it and try to do something different. Now you have Siri and Google Voice. So voice is another option which is being explored by all of us, I think. And the device, we had, when it started, you had only 2 features in a phone, mobile phone. Today you have close to 30 odd sensors. You had GPS, you have weight, distance, height, and lot of apps which can help. Not to mention the speed has increased as well, unlike before where you had to really wait for data. So that is leading to a lot of changes. I think even regulation-wise, they are understanding these changes and trying to take action. Demonetization has given another flip on a lot of digital work that will take place in the country. Digital payments and acceptance of digital has gone up. And that's where it makes us in a very exciting times because here we are with a lot of technology in hand. We have technical skills, technical resource in the country. We don't depend on anyone, on the people side at least. And on the other hand, we have a government who's created an environment, may not be necessarily for us, but definitely an environment has got created which encourages a lot of digital transactions. And therefore, we are in that sweet spot that if we embrace it and take new technologies like augmented reality, machine language, which many of us are doing in some way, but at a much faster pace than what we do, we'll surely be ahead of the curve. And the only thing is we have to keep remembering the history, because as I said, history has a bad habit of repeating itself, that ultimately it's a matter of trust. And therefore, the word security plays a very big part of it. So there'll be a lot of excitement, but unless it is secure and unless the customer feels it's secure, and we see this happening in the news, Paytm, it's not secure. Qualcomm yesterday made a mention that most of the apps in India are not secure, the payment apps. And that is what we have to be careful about. But if we can get this trigonometry right for our products and our offerings, then we definitely have a better chance to be on the customer's phone. And since we will be on the customer's phone, we'll be the preferred partner for the customer. Thank you.
Thank you, very useful. So, I'm going to summarize what we heard, and it was very, kind of detailed discussion around what is coming up. So if you were to look at the summary, we all heard very clearly that the technology is changing. We're going to see a lot of new things coming up, blockchain being one which is very highly visible. We talked about artificial intelligence, we talked about machine learning, we talked about the fact that there is also work happening on the, in fact, the one thing which we didn't talk about, which is also going to be very, very aggressively getting picked up, is IoT. And more the connectivity, higher the risk. So that brings us back to this discussion about the one thing which holds the industry kind of in a kind of place where it is the fact that it is still trusted. People do not have their eyebrows go up when they deposit their money in the bank. And that's a very, very important differentiator. And if that kind of gets broken, there is no reason for anybody to believe that all of this industry will exist. At the same time, I don't think we should live in a time where we think that there is no competition coming our way. One of the gentlemen mentioned here that probably there's a P2P picking up. The reality is in India, there's a company which has got a license to make loans. It's peer-to-peer. It's starting to happen. It's a company called Faircent, I think. And you'll see that pick up because in the overseas markets, companies like Cabbage and all that do aggressive lending. And in their basic model is their cost of operations is very low because they leverage technology to the hilt. And much of the technology actually picks up the information which is currently in your hands. And one thing which you probably, many of you don't, you're all techies, probably know more than me, is the fact that the mobile actually has the capabilities which are not leveraged more than 10% even today. So for example, let me give you one example. You have the ability to actually analyze the lat-long movement of a mobile and actually validate whether the declarations made by the customer, whether it's regard to the business address, home address, and other things, is valid or invalid. You don't have to ask anybody. You can just use technology. So there are a lot of things happening. So that's one thing. The second thing you heard is that we are living in exciting times because Government of India is actually making such a tremendous push, and it's beautiful to see. And it's for us to figure out how much we want to participate. We as IDFC Bank have complete skin in the game. There are things from what we started to hear about as JAM treaty earlier. Then we talked about the penetration. Now we recently talked about the toll plazas. Then we're talking about the digital lockers being made available for people not needing to put all their things. There is also enough push which doesn't get to talk about enough, which is like even the government infrastructure. Think about the amount it used to take for you to even figure out your balance in your Provident Fund account not so long ago. Today you have actually access to your PF through almost like a bank sort of a login. So there is ton of activity. He was talking about being able to actually draw your money from your funds online real time very soon. So I think those things are happening. The other thing we heard from the other gentleman is that the preferences are driving a change in how customers behave. Relationships are getting replaced by the convenience. The service is going to become the key differentiator. And how you actually provide the ultimate UX will be the differentiator, not really the product. Customers are no longer willing to wait for 3 hours to explore all the features. They just want to be convinced in first 30 seconds about what they need. The other thing which we heard is that experience is the key and trust is overriding principle. So all of these we heard, and I think it's very thing. So since we are almost on time, I'm going to do one last thing and then I'm going to close the session. I'm going to put them on spot. And that is going to be a question to each one of you. What is that one thing which keeps you worried about the next gen technology in your business? You ought to speak, people can hear you. You take this.
Yes, privacy of the privacy.
Yeah, secrecy. Care about this data.
I would say scalability.
Yeah, same here. Scalability and new commercialization of technology.
So effectively, what we are hearing here is two things at the same time. We see it as an opportunity, but we also see it as a threat. My view is, I think there is a very increased activity in the cyberspace globally. I personally am involved in that space, and it's going to keep increasing by the day. The challenge for the IT industry, since many of you are actually from that side, is to really do innovation in cyberspace which is homemade. Today, one of the big challenges in cyberspace is much of the products which actually protect the assets are not made in India. So if you can get into that space and design stuff which can make the protection real, and you're not questioning the tool itself, I think that'll be a big day for the country. So my humble request to all of you. So thank you very much for patient listening. It's been wonderful to have you. And we want to conclude with this because it's 5:45. Thank you very much.
Thank you very much, sir. Thank you very much. And you're right on time. This panel discussion got finished, but a very insightful discussion and views from all the stakeholders being taken. And thank you very much, Mr. Munga. And I request you to please present mementos to all the eminent panelists on stage. And we'll start with Mr. M.V. Sheshadri, Chief Information Security Officer of National Stock Exchange. Applause for Mr. Sheshadri. Mr. S.K. Mishra, CISO of Central Bank of India. Mr. Bhavesh Lal Lakhani, SVP, Senior VP and CTO of DSP BlackRock Investment Managers Private Limited. Mr. Kanchan Kulkarni, Regional Head of Maharashtra ICICI Bank. Mr. Lalit Popli, Head IT of ICICI Prudential Asset Management. And I request Mr. S.K. Mishra, CISO of Central Bank of India, to present a memento to our moderator, Mr. Avtar Munga, COO, Chief Operating Officer of IDFC Bank. Our group photo of our moderator and our panelists, we request for that. Please have visited Cloudera Expo. Lucky draw will take place just right away.